Good evening. My name is Steve Engelberg. I'm the editor-in-chief of ProPublica, and I'd like to welcome everybody here tonight to the Arthur L. Carter Institute. First, I'd like to thank the Institute's Kate Panuska and Stephen Salmon for their help in organizing this event. And of course, I'd like to thank our distinguished panelists for making this all possible. I think we've got a great conversation ahead of us tonight. In the history of the modern world, big events have inevitably resulted in big shifts in paradigm. From the Great Depression to Pearl Harbor to 9/11, the experience of living through cataclysmic events has rearranged the thinking of readers and reporters alike. There's been a fair amount of thinking and talking about the performance of the financial press leading up to the meltdown in 2008. Tonight's panel will look forward at the question of what has happened in the years since. We are honored to have Felix Salmon of Reuters to lead this discussion. He's asked that I not give my prepared gushy introduction, but you know, of course, Felix needs almost no introduction. He is described on the web as a blogging editor, which I always thought was a contradiction in terms. But he is, in all seriousness, one of the foremost commentators on financial affairs, and I'd like to bring him up here to introduce the panel and get us going. There will be question and answer afterward. Please line up at that microphone when you want to ask questions. Felix will signal us when. And also, for those who might be tweeting about this, we suggest the hashtag #InvestigateThis.
So, yeah, I've just realized that there's 4 panelists and 4 chairs, which means I get to stand up for the whole thing. Feel like I'm conducting like some kind of maestro. Yeah, hashtag is #InvestigateThis, which I will try and follow on my trusty iPad. But let's bring our panelists up here, starting with the tallest. McArdle is the fabulous finance, business, economics, something like that? Blogger
economics, business, and public policy.
Public policy blogger for Newsweek, formerly of The Atlantic, previously of The Economist and various other august publications. And then I guess next down in terms of height would be James Stewart, who genuinely needs no introduction, is one of the deans of financial journalism, actually teaches at Columbia. And has written many books. How many books?
No.
A couple of dozen. And has an awesome column in the Saturday New York Times, which is must read. Jesse Eisinger, I'm very proud to say, used to work with me at Portfolio magazine. He had the swanky job for Portfolio magazine. I had the children's table job for Portfolio.com, and he when that closed down, wound up in his current perch at ProPublica, who are sponsoring this whole thing. Thank you very much, ProPublica. And finally, last and absolutely not least, the greatest journalist on planet Earth. I have to say that because she's my boss, Chrystia Freeland, whose most recent book is Plutocrats, all about, well, basically exactly what it says on the tin. And we just launched today, preview.reuters.com, a little sneak peek at what is going to be the greatest website on the planet. And so that's extremely exciting and has absolutely nothing to do with what we're talking about today, which is the financial crisis as conversion experience. Now, Chrystia's going to put her little microphone on. I am going to explain what that means. It all came from an email that I got from Jesse, who, I can't even remember what the email said, but basically...
Something profound.
Basically, we were talking about the way that a lot of journalists, Jesse I think among them, were radicalized by the financial crisis. Most of the time what we do is we report on what's going on in the world. And during the financial crisis, that was one of the most exciting times to report on what was going on in the world. And none of us got a lot of sleep, but there was things banging and crashing all around our ears, and it was hard to keep up with it. But when the rubble cleared, we realized that there was that there had been some massive fault lines which very few of us really knew were there. And I, for one, changed my mind on a whole number of things, including synthetic collateralized debt obligations and the wisdom of structured finance and the propensity of banks to lie about what they do, and the wisdom of having lots of leverage and all manner of other things. I have never changed my mind on so many things so quickly in my life. And so we thought this is kind of interesting because, well, for one thing, journalists aren't normally meant to have opinions, but also Jesse, for one, became something of a campaigning journalist when he turned up at ProPublica. He won a Pulitzer for his investigation of Magnetar, which is a hedge fund. And I guess historically, if you go back to before the financial crisis, you would look at the sort of credit arbitrage strategies of places like Magnetar, and if they made money, you would say, good for you, you're a billionaire. And if they lost money, you would say, aren't you a goat, and laugh at them. And then they would make lots of, they would go off and retire, licking their wounds to their Hamptons cottage. But this changed after the financial crisis. And I think one of the reasons why Jesse, and why the Pulitzer Committee gave Jesse its award was precisely because there was this new moral dimension to what was going on. And it was felt that these financial wizards weren't just playing with money, they were playing with people's lives and livelihoods, and that somehow they needed to be held to account. And no one was doing that. Certainly the justice system wasn't doing that, and maybe it fell to journalists to do that. But enough from me. I think, yeah, Jesse is the one who understands what this panel is about. So I think Jesse can explain. Can you explain what your conversion experience was, if there was one?
Yeah, so I think what happened was I was reading a couple of things in succession by Michael Lewis, and particularly a review of British novelist John Lanchester's new book, Capital. Maybe I'm conflating both the pieces, but toward the end he sort of said, in a different era, these people would have been strung up. And I thought, I can't imagine Michael Lewis having written that sentence in 2007 or 2006. And I thought about the radicalization that Lewis seems to have gone through, and why that's happened. To me, I feel like my grandfather's generation going through the Great Depression, where, if you remember Art Spiegelman's father going to the cabin with the free gas and refusing to use a match because he kept the stove lit the whole time and would never use a match to light his own cigarette because matches cost money, and the gas was free. And my grandparents weren't like that, as crazy, and obviously Spiegelman's father had gone through the Holocaust, but sort of the Great Depression and the Holocaust were these seminal events for that generation, and for our generation, to me it seems like the financial crisis for economic reporters, for financial reporters, is that kind of seminal experience, not quite as severe as the Holocaust.
Jesse, having automatically violated Godwin's law with the very first statement of this panel, where do you stand on this? This is a little bit extreme, is it not? Holocaust? Great Depression?
I will say that my grandfather used to hide money around the house. My grandmother was once about to give a teapot away to the jumble sale, and then she thought, oh, it's dusty, it's from the basement, I better clean it out. She pulled out $10,000, which my grandfather had stashed. And I used to think this was really funny. And then I was unemployed for 2 years, and all of a sudden it made total sense. And even more now after I had a series of interesting conversations, actually very shortly, in my mind anyway, before the financial crisis between 2006 and 2007. And the first one I remember was with a credit analyst at a major bank. And we were chatting and having coffee, and I was asking about business. And he was talking about how great it was that we had figured out how to engineer all this risk out of the credit markets. And because like I'm naturally contrarian, I'm not particularly smart, but I'm just like naturally, when someone tells me something is true, I'm just like, no, it's not. So I was like, well, have we actually gotten better at it? Or do we just think we've gotten better at it? He was like, no, we've actually gotten better at it. So he lost his job in 2008, along with his entire department and like half his colleagues. And similarly, I remember interviewing Ken Rogoff in 2007 about the Great Moderation and how it was awesome that we had engineered all of the risk out of the, and bank runs were basically impossible, and the Fed was keeping growth on a steady pace, and you couldn't get these horrifying, and then after 2 years after the financial crisis, I interviewed him again, and he just sort of pensively said, there's entire PhD, like entire departments of grad students who built their careers on the Great Moderation, and he just sort of trailed off into a wave of nostalgia. And that's, I don't know that I've been radicalized in the sense that like I would like to string them up. I tend to favor more systemic. I thought they were idiots before, right? I went to school with these people. I went to business school. I didn't think they were idiots, but I didn't think that they were as big geniuses as they thought. What I did think was that the system, I didn't realize that the system was so fragile. I'd sort of basically assumed in the way that, if you go back to 2004, one of the big decisions that people talk about as having contributed to this crisis is the SEC decides to allow the big broker-dealers like Lehman Brothers to lever up more, to have a smaller base of assets on which they borrow and trade. I know it kind of turns out that maybe this didn't matter, but the transcript of the conversation is really instructive because you have all these people going, well, we're so much better. We've firewalled damage. If something happens, we're fast. We've got all this data. We can step in and stop it before it spreads. And like one guy says, what if we're wrong? And everyone's like, oh my God, that'd be awful. And then they all go and vote. And that was like fundamentally, you just couldn't imagine it. It made sense when all these housing analysts, I don't think that they were evil. I think that they genuinely looked at these models and said, housing prices in the United States have not fallen since the Great Depression. And since we know that the Great Depression is impossible, ergo, what we are doing must be safe. We must be well diversified.
Well, that was Ben Bernanke, right? He turns around at one of those grand conferences in Jackson Hole or somewhere like that, and says to the woman who wrote the entire history of the Great Depression, well, thanks to you, Anna Schwartz, we will never have this again. Well, and then you had his predecessor, Alan Greenspan, saying of all of these wonderful structured debt obligations, thanks to these wonderful, the ways that you can slice and dice debt, risk is being held by exactly the people who want exactly that kind of risk, and they know exactly what kind of risk they're holding, and they were all wrong, Chrystia, were they not?
Yes, they were.
And were you wrong as well, or were you always a bit skeptical of these?
No, I was very wrong. I was part of those who were cognitively captured. For me, I think I had a couple of conversion experiences. The first one was, as you know, Felix, my sort of formative time as a reporter was in the Soviet Union and then the former Soviet Union during the collapse of communism. So I always had this sort of set of people I talked to who were Russians and Ukrainians and Russian and Ukrainian oligarchs. And I remember right after the financial crisis talking to one of them, and they said, well, this is the joke in Moscow right now. Everything they told us about communism was false, but everything they told us about capitalism was true. And that was sort of the general Russian view. They weren't surprised by this, by the way, which means more shame on me for not having kind of taken some of that Russian, including billionaire Russian skepticism about American capitalism with me to New York. And to give you a sense of how profound it was, I had lunch in 2007 with one of the Russian oligarchs in New York. And this was the moment when the big, cool thing to do was to invest in private equity and hedge funds. And the Chinese were doing it, all the sovereign wealth funds were getting in on the action. And I said and this is a person I would consider sort of on the verge of being a friend. So I said, hey, this is what everybody in New York is doing. Why don't you do it? You have billions of dollars. And his reaction was so interesting. He said, when they come to our country and invest their money, we totally screw them because we play by Russian rules. And he is actually quite legendary for having done this with wave after wave after wave of Western investors. And he said, so I know that if I were to invest my money in an American fund, they would do exactly the same thing to me. And I thought, oh, my overly cynical Russian friend, he doesn't understand the rule of law and, you know, the fair, transparent rules of the game and Western capitalism. That would never happen here. You know, needless to say, if only the Chinese had been spending more time in Moscow, they would have done a little bit better. The only sort of extra thing that I would add to the point about cognitive capture, which to me was kind of the second stage in thinking about this, is it wasn't an accident. So it wasn't, I don't think, an accident that economists and policymakers and journalists came to feel, you know, as a group, that this wave of deregulation was a good thing and that everything would be fine forever after. There were a lot of people who made a lot of money from that type of thinking. And again, I'm with Megan here. I don't think that these were evil people, but I do think that the economic interests and the cognitive capture are really connected. And I think Willem Buiter, the former member of the MPC in the Bank of England, now chief economist for Citi, I think he's put it really well. That it wasn't explicit corruption. People weren't paying people off, although there was probably more of a revolving door than we would like. But a big part of what led up to 2008 was very, very powerful vested interests were making a huge amount of money from one way of thinking about things. And there were a lot of fellow travelers, and I think a lot of journalists and economists fell into that camp.
It's what I call the Rubin trade, where you bet on something which has a 95% chance of winning, and you make a big leverage bet on that, and you make loads and loads of money. And it's a trade which works until it doesn't, at which point you blow up, and with any luck, you've moved on to something even grander at that point, and it doesn't affect you too badly. But this is it. You had a bunch of people who, the people who bought into that worldview were the people who became successful. The people who didn't buy into the worldview and said, no, wait, there are too many dangers, we've got to put on the brakes, they wound up being marginalized. And so you wound up with a population self-selected of deregulatory zealots, did you not, Mr. Stewart?
Well, we certainly had plenty of those. I guess I would have to say I don't think I was radicalized. I'm not a radical by nature, but I was stunned at how little I knew about so many things that were right in front of my face. And I thought I was, well-informed, madly reading stuff and busy all the time and talking to people. And how did I miss all of this? So I did do a lot of work. I did a lot of homework. I went back and read things. And addressing some of your points, I went back to read some of the Nobel Prize winning work from the Yale economists, Markowitz, Tobin, those people. And they were the intellectual underpinnings. I think you could trace the whole edifice sort of back to them. I don't know if any of you have ever looked at this stuff, but you get about a one-paragraph introduction, and then there's a whole page of numbers and equations, and one of those swooping S things. What is that, a derivative sign from calculus? Integral, yes, okay. And I thought, oh my God, that's as far as I can get. And I thought, I wonder how many other people in this infrastructure who were in charge of using this material got about as far as I did and say, well, they won a Nobel Prize, so they must be right. But I will say, this may be a contrarian view here, leaping ahead, that it wasn't that they were all wrong either. A lot of people, in the financial crisis, everybody panicked, Lehman Brothers, all the stuff they had got marked down to nothing, and people were saying it was worthless, all these CDO squared things, they're worthless. Well, a lot of people are out there buying the, $10 million apartments I keep reading about in the Wall Street Journal real estate section, went out and bought this stuff. And they're making tons of money on it. The default rate in the subprime mortgage area ended up bottoming out somewhere, I'm plucking this number out of thin air, maybe 28%, which was of course horrible, and none of the models had predicted that. But that meant that well over half of them, they kept paying their mortgage. These things ended up having a lot of value. All these vultures out there went and bought it and are making millions off of it. So a lot of, it wasn't so simple that everybody was like stupid or venal or cheating or whatever. There was truth to this. And by the way, I'm the senior citizen here, I guess, so I wrote about the, the junk bond crisis and all that. And just like junk bonds were not really the problem in the S&L collapse. They were the symbol of it all. These highly diversified and in some cases leveraged CDOs and CLOs and all that sort of thing, I suspect are not really the problem again. And they're back and they're growing again. I was on a panel not long ago with some financial advisors who were exhorting everyone, saying, oh, CLOs are the greatest thing. And somebody in the audience actually had the foresight to say, wait a minute, haven't we watched this movie before? And it's the same idea that you can take suboptimal assets and you get them so diversified and then you chop them up into pieces and you have tiers where the first to default are the highest risk and pay the highest interest rate. It all sounds great, and it's still all going on out there. And so there is some truth to it all. I mean,
but I think the truth. I don't want to get too into the nitty-gritty of finance and get away from the sort of moral element here, which I think is in many ways more interesting. We've rehearsed this whole question about solvency versus liquidity. Joe Cassano of AIG famously appeared in front of Congress and said all of these instruments that I was underwriting, none of them actually defaulted, and that didn't matter because there wasn't the liquidity there. And you wrote actually very eloquently about your own little baby liquidity crunch when you got involved in auction rate securities, which again didn't default, but it didn't matter because there was no liquidity.
They might as well have.
They might as well have. So, but I guess the question is like, you seem to have come through that and come out the other side with a certain amount of equanimity. You're not asking people to string anyone up. You don't want accountability. You see all of this resurgence of structured finance and you think that it's a little bit of a bad joke and oh my God, look, these people are going to make the same mistakes all over again. And it doesn't sort of stir you morally in the way that it does Jesse.
You mean me personally?
Yeah.
Look, I would love to find a culprit. I'd love to put somebody in jail. And
You've done it before.
Apparently, some people think I've done it before. The ones who went to jail, and then have sued me for libel and other things. But take these. There are the three big defendants in the SEC. Not even criminal cases, but civil fraud cases. There's the famous Goldman case with the fabulous Fab, who's due to come to trial in July. So he's still out there. The Citibank guy,
Brian Stoker
was acquitted.
Mm-hmm.
The SEC, I wrote about this guy, the JP Morgan guy. The SEC dropped the charges and publicly stated that they were wrong to have brought them in the first place. And when I delved into those deeply, those were incredibly flimsy cases, in part because these guys are the foot soldiers out there. How old was Fabrice Touré? Like 20s or something, and
yeah.
His bosses they're not getting charged with any wrongdoing. These cases have not been strong, and I don't think I don't quite understand. I do think the Justice Department is amazingly passive. I don't think President Obama has shown much of any interest. It's like, oh, this is water under the bridge. We don't want to. Let's don't stir anything up. So I would like to have the subpoena power and be the Justice Department looking into some of these cases, but I can't say I've come up with any great examples of people who should go to jail. And I've been looking. I'd love to see a scapegoat.
But okay. So Chrystia, I just because we had to pass through Cooper Union security to get up here. I've been writing about Cooper Union and the way that the Cooper Union board, while it doesn't like earlier iterations of itself, will never actually point fingers and hold anyone accountable or blame anyone. Is there not a case here that the oligarchs and the plutocrats and the elite just within the US are going to, like when push comes to shove, rally around each other and protect each other?
Sure there is, but I think that the instinct of journalists, and it's a good one because it's how journalism works and how stories work, has been to really search, not even for scapegoats, but for people who are genuinely culpable. And we've looked really hard, I think, actually, genuinely, because it would be a great story. People would win many Pulitzers. It's kind of what we're in the game for, to find some individuals who did really bad things, who were personally to blame. And sure, there were lots of people who did lots of bad things, but I'm with Megan that the problem, I think, is more a systemic one. And I think the bigger problem, and actually I think this is true about Russia and loans for shares too, for what it's worth, is not the crimes that are committed, but people doing perfectly legal and in many cases perfectly economically sensible and intelligent from the point of view of their institution things, which taken together wrecked the system. So that kind of would be my view. Having said that, I do think, to get to this point of morality that, Jesse and Felix have been pointing us to, I think something has changed in how capitalism works, sit between the post-war era and today, where I do think there is less of a connection between the decisions people make in, people who are in positions of authority, controlling capital, controlling businesses, and there's less of a sense of responsibility for the wider universe of stakeholders. I'm not sure how you change that. I definitely saw it, comparing how Canadian bankers who live in a kind of very oligopolistic, very incestuous, much less meritocratic, you essentially have to be Scottish to run a bank in Canada, a much more kind of closed shop world. We all thought as Canadian journalists, when I was at the Globe and Mail, we ran a piece we were so proud of called "Why Can't RBC Be More Like RBS?" And the conceit was two royal banks. We thought we were so smart, right? And they were like essentially, the Scottish people who stayed in Edinburgh, the Scottish people who went to Toronto, and those Edinburgh guys doing a much better job than these boring, dumb Canadian bankers failing to do fun, brilliant things. And whenever I see the CEO of RBC, he reminds me of that piece. Because of course that world, which is a more kind of 1950s world of, closer connection to the community. I'm not sure what the things are that have changed, but something has changed, and part of it is around morality. To just have a final Canadian example here, Ed Clark, who is the CEO of TD, who I think is the best Canadian banker, he actually sold out at a loss at a time when he got a lot of flack. Most of his complicated packaged securities. He has a PhD in economics from Harvard, and he said he had two tests. One is, can I understand them? So I think he did what James is suggesting people should do, read it. And he just said, I didn't understand it. I talked to my bankers. I wasn't confident they could understand it. And then his second test is, he calls it the mother-in-law test, and he said, could I really put my hand on my heart and say I would sell this to my mother-in-law? And that's a very kind of old-fashioned vision of your duty as a steward-type banker. I do think Wall Street is pretty far from that, and I think that's part of the reason that things aren't working so well in aggregate.
Megan, you went to, wait, hang on a second. Megan went to business school here. Did anyone at business school think in those old-fashioned terms?
I remember having a really interesting conversation, actually not at business school, but a couple of years later with some bloggers and who were finance people. And we were all sitting around and talking about these, these buy ratings that equity analysts used to put on stocks. And of course, everyone knows, buy ratings crap, right? Like they put buy ratings on everything that isn't actually about to go bankrupt. And so, I noted this, and we were talking about what's called big bath accounting, where like you take if you have to take a big loss, you just cram anything you can think of into that accounting thing, because later you can reverse the stuff that didn't happen. You're like, an asteroid's gonna hit the Earth and my business is gonna be wiped out. And then the asteroid doesn't hit the Earth, you get a nice big earnings boost, right? And so, we were talking about, I learned in business school to back all of these charges out. It's like one of the first things they teach you is how do you undo all of this stuff that they put in the financial notes in order to, and we're talking about this, and two people who were financial analysts, which I was not, except for one brief and horrendous summer at Merrill Lynch, said, well, of course, but no one like reads these reports for the buy ratings, and no one pays attention to that stuff. They just back it out. You know, you look in the notes. And I was like, no, wait a minute. I feel like probably someone does, right? Because otherwise they wouldn't bother sticking the buy rating on, right? It's not just a decorative thing on the cover. They have a stamp. It's pretty. We like B. It's a good letter. Some doctor in Houston was reading the buy rating and thinking, oh, this analyst must think that like Dell is a really good stock and I should buy it. But the culture, it wasn't like, we never questioned this. It like never even came up in my classes. Why are they doing this? This weird thing that I now have to learn to undo by going through the notes and subtracting all that stuff out and getting a true value. No one asked. And you know, we all knew that this stuff was stupid, and we forgot that there was a large universe of people who didn't. And it wasn't even a thing of like, we're gonna rook, the question never got asked. It had sort of emerged at some point in history, and now everyone did it, and you just knew it, and you didn't really think about who was reading that symbol and paying attention.
So has that changed in the wake of, first of all, Elliot Spitzer going after, you know, Henry Blodgett and all those people, and now in the wake of the financial crisis? Do you think that anything has changed?
No, not really. I mean, like, first of all, Elliot Spitzer failed to get anyone who took him to court won, right? Like, he basically could go to a small firm and be like, I am going to invade your offices, subpoena you, take out all your records, and basically you're not going to be able to operate your business. Your liquidity will dry up and you will go out of business. You should give me $4 million, which was like weirdly often in the form of a donation to your favorite charity and all of these really weird settlements. But if someone was like, no, I think I'm going to go to court, he would lose. And in part, it's because these cases are really hard to try. I remember I was talking to a securities lawyer who was like, you have to understand, most of the time the lawyer doesn't even quite really understand what happened. It's really complicated. And if you try to tell the jury what happened, they hate you.
There's only one lawyer who understands these things, and she's in Australia.
Right. But like, here's the thing, and I think that what Chrystia is saying is really important. Competition makes this stuff happen, right? If you're in a nice, cozy, little protected oligarchy, it's easy to throw crumbs, right? Because you've got a lot of surplus. But we should remember, and we should remember about deregulation too. The reason deregulation happened was that it dramatically failed with the S&Ls, right? Like deregulation, the regulations that created these oligopolies created the S&L crisis, because in order to keep the banks safe, they had regulated interest rates in such a way that basically you couldn't, you know, the S&Ls had all of these long-term mortgages at low rates, and they couldn't offer savings accounts at competitive rates. And when inflation shot up, the delta between their mortgages and their savings accounts was so large that they just, you know, they were sort of inherently bankrupt. And there were other problems as well, but like, those changes in the tax code to make it simpler and better and not have all these ridiculous passive losses on real estate. It's bankrupted a lot of S&Ls in Arizona and Texas. So I think there's a temptation to look back and be like, the 50s was so great, it was so well regulated. We should remember the bankers were a cozy oligopoly that you couldn't get into unless you were a member of a nice white Protestant family, a male member of a nice white Protestant family, preferably related to someone who was already in the banks. The disruption of allowing ethnics in was a big disruption, but it increased the competition, right? Suddenly it wasn't like only the guys from St. Gretel sex. Suddenly you have thousands and thousands of people who want your jobs. What do? You have to be more competitive. You need more interest rates. So, and so I think like there's a temptation to look back and be like, well, that was safe and awesome, and in some ways it was. But there were also real costs that were driving people to change the system. It wasn't simply that like everyone got together and said, oh, we could make so much more money if we did this. Competition can have really bad side effects, I think. And that's something that I have really changed my mind about.
So I have two questions for Jesse here. I think I'm going to ask the one about what we've heard from Megan and Jim and Chrystia, all three, is that the criminal justice system, even the civil justice system, just isn't up to prosecuting the kind of things that the kind of malfeasance that we saw in the financial crisis, for whatever reason, for good or ill. I think there are two possible reactions to that. One is to say, oh dear, you know, we can't prosecute these people, and oh dear, hasn't isn't it a shame that nothing has changed? And then the other one is to say, well, if the courts aren't going to do it and the politicians aren't going to do it, doesn't it behoove the press to actually go out there and become a little bit more campaigny?
Well, I don't think of what I do as campaigning, but I certainly.
But would you like to do that? If you didn't
I've
have Paul Steiger here preventing you from doing that?
I only analyze. I don't have opinions, as everyone knows in my column. But what I have completely changed one of the ways I think about what I'm covering, which is that I elevated the moral dimension to the first question. And so the question of whether something was legal or whether the SEC will lose in a trial is far down in my list of questions. Whether Eliot Spitzer lost a trial, that's a kind of the backlash to Spitzer is exactly that. But he went into the banks and made them face activities, practices that they were doing that they could not defend, putting buy ratings on stocks where they secretly thought they were crap, and allowing their friends and family to get in, laddering up their IPOs to buy and sell at a prearranged price. All of that was maybe not winnable in court, but obviously an abomination. Mutual fund timing, where they were allowing certain favored clients to trade after hours and bet on the horse race after it
I
had
think
been
that was
completed.
actually I think they could have gone to jail.
They lost the case. Spitzer lost the case against a low-level guy, Bank of America guy, for that. But it was obviously wrong, as we all agree. So what I think about is where are the things that are wrong? What are the things that offend my sensibility? And then I try to learn about them. Obviously I have to be a little bit humble, deciding what's right and what's wrong. As humble as I can be. It's hard sometimes. But so what I'm trying to do now, looking forward, is how this system is perpetuating itself. So when I see CLOs coming back, it doesn't make me think that CLOs might have been a product that are really actually wonderful and working. I think there's something seriously wrong that we have, possibly, that we haven't fixed this system, that either the monetary policy is in the service of these investments, or the political system is captured by financial interests to allow this to continue. It doesn't make me think, my God, maybe the financial crisis of '08 was just a blip.
Well, I didn't mean to suggest that.
Yeah.
I do think this morality issue is quite interesting, because one of the big changes I've seen in the financial world and Wall Street generically, I guess to oversimplify it, I'd call it the rise of the trader. And the trader is a proudly amoral animal. So when you say, why did you sell this horrible, whatever that thing Goldman peddled off on the German bank, they say, well, somebody wanted to buy it. We just stand in the middle. Somebody wants X and somebody wants to sell X, and we put them together. That's our function. And by the way, that is a virtuous function. That it counts as liquidity. We're doing God's work, whatever they want to call it. But it was like when I would say, but wait a minute, but this is a piece of you-know-what. And that doesn't even register. If somebody wants to buy that, my role in life is to provide it. So this whole idea of morality vanishes. It's proudly.
But it doesn't quite vanish, because I think the thing that you've just said, Jim, which is really interesting, which connects with Jesse's really interesting point also, is it is a virtuous function. It is God's work.
Right.
And I do really think part of what made it so hard for everybody to see what's happening is something that I think Nick Hanauer, the Seattle guy who was early Amazon investor, tech entrepreneur, who's been writing about this, the way he puts it is, he says, the really great thing about being a successful American capitalist, basically from Reagan to 2008, was you weren't just rich, you were virtuous. And you were virtuous automatically. Like the size of your bank account equaled virtue,
The virtue.
because competition was
Calvinist, I
good
guess.
and capitalism was good, and so you could feel, and he's like, it was just, you can't imagine how great it was, because you could feel just by doing your work and getting richer and richer, you were being a great citizen and contributing to society. And I do think that was sort of the gestalt, traders who were like, trading pieces of you-know-what actually felt they were like great, virtuous contributors to this humming economy.
Before the crisis, a bunch of time talking to the people who are lovingly referred to as vulture funds. And I met a lot of these vulture fund investors, and morally speaking, the overwhelming majority of the public and the press finds these people to be quite morally turpitudinous, I guess is the word. But the fact is, you talk to them, and they are full of self-righteousness, and they are convinced that they are on the side of the angels, and that they are the virtuous ones, and they are the ones standing up for sanctity of contracts or whatever it is they think they're doing. And I think it's actually really hard to find some snidely whiplash sitting there going, oh my God, isn't this wonderful? If I just throw my morals out the window, then I can make lots of money.
Yes.
But I think what has happened, and I want to ask Chrystia about this, is that there was a change from the Nick Hanauer era of the dot-com boom, where everyone was getting richer, to the 2000s, where people thought they were getting richer in the housing market and then they lost all of their money, to the current recovery, where absolutely no one, the bottom 93% don't even think they're getting richer. And yet, everyone who controls the capital, everyone who has money, seems to be making money hand over fist. The stock market is hitting record highs. There's the Fed is dropping money from helicopters, and the rich are getting massively richer, and 93% of the population is getting no benefit out of this whatsoever. And and in fact, the number of people who are working is shrinking, and you have this massive millions and millions of people who just don't have any work, don't have any money. And is that not, at some point, what we are seeing with, the Tea Party and other things, is America becoming a little bit radicalized? Can we think that maybe from some, stage left, that there's going to be a slightly more heartfelt way of looking at these things?
So, of course, I agree with you, Felix. And the 93% is from the Pew data. If you look at Emmanuel Saya's data, he says it's actually 99%. And he says, Sayas has this great data set, which I know you know about, that between 2009 and 2011, the 99% actually had a negative recovery. And the 1% had a positive recovery, so that's kind of striking. And I do think that, we've spent most of this time talking about finance and financial instruments, and that aspect of things. To me, the really, really important takeaway from all of this is the Raghu Rajan takeaway, which is that the real sort of political and social consequence of this financial bubble being inflated was that it served to mask what was happening in the underlying economy. And it meant that we weren't noticing what was happening to middle class incomes and middle class jobs because people made up for it with their credit by, borrowing against their house, borrowing against their credit cards. There was all this, cheap money floating around. And Raghu thinks that wasn't an accident either, and there was kind of this bipartisan deal that too hard to attack the root causes, we don't even know what they are, but cheap credit will make everybody happy. And I do think the really, really hard part, and yeah, it's partly a moral part, it's partly a moral issue, but it's also a question of what the heck should we be doing, is it's hard to look at the Western industrialized economies, any of them right now, and to believe that they are really delivering on their promise to the broad swathe of society. So what do you do about that?
Quick announcement. If you have any questions, the best way to ask them is on Twitter with the investigate this hashtag, but we are going to grab some questions over here. But I want to throw this one over to Jim and ask you generally write relatively narrowly financial columns about what's going on in business and finance and personalities and financial instruments and that kind of thing. Is there a sense in which by doing that you're actually missing the really big story?
Well, I guess, wouldn't Emily Dickinson say that we can see the universe in a grain of sand? I tend to think that large truths are embedded in the granular story in many cases, but I don't want to say that that means that there isn't a place for much the going out, to outer space and then looking back down. And there's room for all of that. And thank God we have so many different kinds of journalists that write different kinds of stories. I don't feel I personally have to do all of it. So I tend to write about the things that I find most interesting, curious, or puzzling. And then to bore down. That's sort of my style. Now, in a book or something, you can sometimes, move back to a broader, and there are some broad issues. I don't tend to write that much about, macroeconomics, but since you, brought it up, obviously we're in an easier money world now than we were in either of the other bubbles. So we don't think something is happening out there because of this. It has to be, almost by definition. And I will say, I think journalists certainly, and probably me too, have become we've had two bubbles in 12 years or whatever. So we're hypersensitive to everybody saying, wait, is social media a bubble? Are bonds a bubble? As everybody's saying, in theory, if everyone's questioning whether something is a bubble, then it can't be a bubble because you're not questioning it. But there's a lot going on out there. I mentioned, these leveraged, these CLO products are back, they're big, and journalists aren't necessarily the first person to hear about these things because we're not the ones buying them. We don't have enough money, and so we're kind of pretty, we're not the tripwire, we're not the Maginot Line of these. I think it's very difficult for us to be, but I don't doubt that there is something brewing right now that we ought to be, getting behind.
Well, we could point out that I would bet that the houses in the neighborhoods where all of us live have come back with an astonishing. I mean, housing in my neighborhood is now above where it was in 2005 and 2006, and you sort of look at that and think, well, we're not getting price inflation, and now I live in Washington D.C., which is of course. Everyone says there's no unemployment there and so forth, but you look at Washington doesn't pay that well. And so how are all of these people affording $800,000 million homes, not on a GS-14 salary? So you do kind of look at this and say, like, are we having yet another round of asset price inflation in the stock market?
I think you actually can afford a $1 million home on a GS-14 salary if you get a 3.8% mortgage.
Even then, it's a little bit tight.
Well, I just happened to be for other reasons, inside Goldman Sachs a couple months ago, and there's these massive floors of people, and they're the ones buying, these multi-million-dollar things. And I was sitting there kind of looking at this army out there, and I think, what are they doing?
Yeah. Ripping the face
I don't
off
know. I have absolutely no idea.
Quick question: do you, if you took the people in charge of that floor, do those people, the people in charge of the people making the $1 million salaries on that floor of Goldman Sachs, do they know what those people are doing?
Isn't the lesson of the crisis that there's no sheriff in town? That we all thought that there was someone out there who knew what was going on and could fix it if it broke, and it turned out that there wasn't. No one knew what was going on, and none of them could fix it.
I think they know less than we thought they knew. But the one other thing I would say since we are talking about bubbles and bubble behavior, one of the things that I think we sometimes forget is a lot of people who were really smart did call the bubble, and they didn't make a secret of having called it. And I'm now talking about the markets, because I think the markets have been much stronger believers. I mean, I don't think the markets really believed in the Great Moderation to the extent that the Academy did or politics did. But when you talk to a lot of market participants in hindsight, what I heard from a lot of people is after all, you need to ride the bubble. And it's not enough to be right. You have to be right at the right time. And people who made premature bets on the bubble lost a lot of money. And if you look at, there's even now academic research about this by Marcus Brunemeyer, among others at Princeton, where he says actually the best strategy, you can be really, really lucky and call the bubble exactly right, but in aggregate, the best strategy is to get off right after it bursts. So you don't quite get the peak, but you jump off the ride before it totally crashes. Yeah. And so it's not, we don't need those people at Goldman Sachs to be idiots for things not to work. They can all be really, really smart, and they can be doing things which they understand and which their bosses understand, and still the overall result might not be one that we all like.
But here's the thing, is they understood, I called the stock market bubble in 1996 when I was a computer analyst, just from listening to the idiots in my office tell each other that this couldn't ever possible. And I called the housing bubble in 2002. It didn't do me any good. I'm still not rich. But the problem wasn't calling the housing bubble, right? Lots and lots and lots of everyone who here did not call the housing bubble actually. Anyone, right? We all saw it by 2004 latest. But the problem was that what people didn't understand was what the housing bubble had done to the underlying default risks on these securities, right? They didn't understand that they had 30 years of data showing low defaults and that you could be pushing out along the FICO score curve and still get low defaults. And they didn't understand that what was happening was that, in fact, people who would have defaulted were just selling their house because the price was rising, and that wasn't an underlying increase in the credit quality. It was something else happening.
And they didn't understand that there were trillions of dollars of synthetic CDOs being priced off 3 years of CDS price data, which was in the middle of the bubble, which they thought was representative of.
But even if you go farther than that, I mean, there had been a secular housing bubble since the early 90s, and that too was distorting the underlying data. Default risk had functionally dropped out of all of these models.
I think they understood it more than has come out, really. I think they understood it by 2005, certainly by 2006. I think that there were a lot of people who were calling it, in the process of calling it, and in fact what they did was they took advantage of it. And I don't think that that's been, we've done a little bit on that. I think other people have too, reporting on it. I think that now what's happened is all these guys have come out of the crisis, and they both want to get off right at the crest of the bubble this time. They understand that things are naturally bubbly, and they also have been invested, as you've written a lot, with an extraordinary sense, bankers, of righteousness and aggrievement. They feel outraged that they could possibly be regarded as knaves. It seems unfathomable. They're doing God's work, and then you've got Washington culture, which really does want to, does believe somehow, or doesn't want to look to see whether there were crimes committed, and wants to believe that you could tinker around the edges of this system with Dodd-Frank. And so we seem to have, what's astonishing to me is that we've come out of this with a few fringe figures saying, that not much seems to have changed here, and everybody else sort of going back to doing it all over.
So wait, we're in the question time period now, so there is a microphone here if you want to line up. But I'm going to start with an awesome one from the Twitters, and I think I want to direct it at all of you, but first of all at the Bloomberg Professor of Business Journalism at Columbia University, because it's one of those questions. What's the role of conscientious journalists in an economy that has little regards for the working class?
Revolution.
Conscientious working class. Well, the role to me of conscientious journalists, there are a variety of roles, but one of them certainly is to tell compelling stories. And if the working class, I mean, Dickens made a fabulous career out of writing about the working class in the Industrial Revolution, and that should be a rich mine of material. I mean, what's conscientious mean? But I mean, journalists who want to tell good stories, there have got to be wonderful stories out there. And I actually was just at a class, we were talking about the business of Broadway, and Newsies has been a big success. Newsies is it's a working class polemic. I mean, I'm amazed like the Wall Street Journal hasn't denounced it. And it's a big hit. But it is interesting to me how little of this kind of classic, kind of gritty, blue collar, kind of these kinds of stories. I mean, does everybody want to read about real estate in the Hamptons? It's like,
how many
why
journalists
is it so tilted towards?
We don't live it.
How many
I don't write about
journalists
this.
now
We don't
know
anybody.
anyone in the
We don't
working
know
class, right? The working class, the journalists
Yeah.
of the 1930s came from working class parents. How many kids who go to Harvard and come out and go through 4 unpaid internships and then finally get in at the New York Times or whatever, have ever met anyone other than the people who take their dry cleaning, who has actually not gone to college and doesn't have a lot of books in their house and kind of goes to a boring job all day and gets it done because they got to feed their kids.
Well, one of the alarming things I keep hearing, because I teach at Columbia Journalism School, is that journalism, like some other professions I could name, like book publishing, are becoming the preserve of either people who are independently wealthy or they married someone who's independently wealthy, because it's so hard to make a living if you're starting with nothing. So you're going to get people who are, shall we say, not exactly in tune with a great working class story.
Yeah, no. I mean, it's becoming like it used to be the kind of young women who got jobs at Vogue, but that's becoming all of journalism. And no, I think that that's a huge issue. And that sort of, discrepancy between, in the 70s, 80s, maybe even early 90s, being a journalist, to take Megan's people who went to Harvard, and their classmates who went to work on Wall Street or became lawyers, they sort of felt like they belonged to the same class. And that's increasingly not the case. So who's going to be doing this?
But even if you want to tell the stories, I don't think it is a failure of will, right? A lot of people go into journalism with very left-wing commitment to, they don't know how to talk to. I was telling it, my mom's from a tiny town in the middle of nowhere in Western New York, and all my relatives there, some of them went to college, but most of them didn't, and they worked kind of middle-class jobs doing one thing or another. But I was telling an anecdote about one of my cousins, and I looked around the room at a journalism panel, conference rather, and I looked around the room and everyone is just clearly kind of surprised that anyone in that room knew what it was like to be a physical therapy assistant and live in a split level ranch where you really, really care about the electric bill because that could push you from the black to the red for a month. And they just don't know what to say. You go down to the bar with those people, what do you talk about? You talk about how you've been watching Scandal and it's awesome. They're not watching that, they're watching reality TV. There's just the intersect between these worlds is so far.
But I mean, Megan, how big is that gap really? I mean, Catherine Boo wrote about people in India, and the gap between her and that Indian rising underclass is surely greater than the gap between Jim's students and working class America.
I think in a way that makes it easier, right? Because you don't feel you understand when I go to Germany, I understand that I don't speak German and I have no idea what any of those weird things on the grocery store shelves are. But when I go to my husband's home in the Florida Panhandle, there's all these little things that I just never thought of, right? Driving your 4-wheel thing around in the swamp, because I grew up in Manhattan. Those things are actually what trip you up. That gap is actually larger in a lot of ways because it feels more my mom will describe this even from the 50s, of all the New York City people who would come up and it was kind of clear that they were surprised that everyone was wearing shoes. And that kind of gap of hostility and do you feel like you're better than me, and that is actually harder to overcome than you live in a completely different country and I know nothing about you.
Yeah, I think her book is fabulous, but socialites will go to the Penn dinner and say, "Oh, I just love that Catherine Boo book," because it's 12,000 miles away. They don't want to read about the the nanny in their apartment unless she's dishing about one of their friends. So,
yeah, that's a really good point.
Question here.
Thanks. So I think what I'm hearing is some degree of frustration potentially with the power of journalism to enforce accountability. And you can tell these stories, you know, you can relate to the public through your venerable institutions. Here's what's going on. You can look back and do the forensics and say, here's what happened in the past, and you can prognosticate on what might happen in the future, but business still continues. And I wonder if, from your kind of unique position and proximity to a lot of the people who are pulling the levers here, if, you know, given the limitations of journalism as an agent of accountability here, what can be done to help fix this broken system? If there was one thing, you know, government seems sort of outmatched, journalism is challenged.
Chrystia,
I know that this isn't necessarily your job.
To quote the great Vladimir Ilyich Lenin, what is to be done?
Что делать? Что делать? Chernyshevsky, I think, actually, was что делать. Yes.
Apologies.
Lenin picked up on it. I think we're maybe coming, at least, I'm not quite as depressed as that verdict sounds on journalism. I think we are trying and we're thinking about it, and I think people are doing more of this kind of work that we've been talking about. I think the crisis was a conversion experience for a lot of people, and I love that sort of working class question, because for me, working class, and I would even more broadly define it as what's happening to the middle class, is kind of the big post-crisis story and the thing that we should be writing about in terms of what's happening to lives of people and sort of record it that way and trying to understand the economics. So, you know, I think that journalism can be part of that. I think politics also has to be part of that. I do think that part of the problem is when it comes to the politics, you know, actually on financial reform, it's easier to see what are the missed opportunities, what are the legal changes that weren't made, the regulatory changes that weren't made that should be made. I think on this whole bigger question of, you know, race against the machines, globalization, all that stuff, what's happening to those jobs, I think people are struggling more to come up with what the answers are. It's part of this point that Megan made that, maybe competition can be bad. And I think that that's a big part of the issue. And, you know, I asked George Soros this question, and he said, it's actually very simple. All you need to do is have a state with the power to effect massive redistribution. So, I guess simple.
Is that bad? Yeah.
Well, I think the answer is both simple and complicated. And the simple part is throw more money at journalism.
Yes.
And I
starting with the four. Yeah.
Well, no, I'm not. I don't mean personally.
I take checks.
But
I take Bitcoin.
That's in several ways. I mean, great journalism was traditionally financed through advertising. Nobody buying the Wall Street Journal, the New York Times was ever paying even a tiny fraction of the cost of that thing. And it was the advertisers paying for it. And now the advertisers want to slap things on somebody's Facebook page. And there's, you know, if there's a finite amount of advertising dollars, and a lot of it is like zooming over to all this social media stuff, it's coming away. Just look at the New York Times earnings last week. I'll say no more about that. But, and then, you know, here we are being hosted by ProPublica, like some really rich people can, you know, why doesn't certain unnamed billionaire give $100 million and, you know, give it to ProPublica, or other enterprises that will, you know, pursue really high quality journalism, because high quality journalism is very expensive and ultimately somebody's got to pay for it. So bring it on.
I completely support that.
Great. Just a short observation and a question. I guess the short observation is this panel's done a really good job of showing how complicated and difficult good financial journalism actually is, because not only does a journalist have to acquire massive amounts of information, far exceeding, you know, probably what the experts, or not even the experts, the people doing it have to do. Once they acquire that information, they immediately have to translate it back down. And it's, I think, the reason why there's so much, all people here excluded, so much bad financial journalism, and there is an enormous amount a very bad financial journalism out there. My question is applying the moral lessons of the conversion experiences to the current day. How do you apply morality to the sums of money that are flying around the financial market? And I have a very particular question just to test it out, and I'd like all 5 of you, if you have time, to answer it. The question is simply, under what circumstances is it justified for a hedge fund manager to earn $1 billion? Any? And if so, what would the justification be? How do you explain that to someone in the Florida Panhandle that yes, under certain circumstances that's justified, or it's completely unjustified? How do you engage in that conversation?
And how is it even possible, I mean, talking about the limitations of financial journalism, how is it even possible to explain to someone in the Florida Panhandle what $1 billion is? This is a number with so many zeros that it is literally impossible to conceptualize. It is impossible to think that big. And then, you know, we know about billionaires and how, like, ridiculously wealthy they are, and we're talking here not about people who have made $1 billion, but people who have made $1 billion in 1 year. So is that ever justifiable, Megan?
You know, I worry less about who has what. I worry a lot about who doesn't have what. I worry about people who don't have jobs, and I worry about, and in that sense, like, I think Soros is wrong, because I look at towns where redistribution, like disability insurance and so forth, is becoming more of the base load of the town, and it's not good, right? Just taking the money and handing it to someone else, people need, on both sides, they need to feel like they're producing and getting for producing. No one likes being on disability, like the kind of conservative portrayal of people who like cackle all the way to, there are like a few people like that, but most people find it profoundly alienating to be out of the labor market and to be cut off from society that way. And so I think it's a bigger question than redistribution. The question that I have, and I don't know the answer to this question, I will say, nor do I know how to fix it. But so the real question to me is the system producing value? Is our financial system just become unmoored from underlying economic value that adds productively to society? And I think those answers, it's easy to be like, no, it's just all like a bunch of people moving numbers around. But you know, people bought and borrowed money to buy houses, and before 2002, 2001, that was actually a good use of even securitization, terrible securitization. You know, it enabled people to go out and buy houses, and they raised their kids in those houses, and they loved those houses.
I think when you know, given that these firms are meant to be intermediaries, when they account for 40% of the profits of the S&P 500, yep. You know, that's clearly they're extracting rents rather than providing broader value. But
well, I think that anyone can make $1 billion in a year is insane. I probably shouldn't say this, but I think the hedge fund industry as a whole, and there are exceptions, is one giant scam. And nevertheless, if you do a bell curve of investments and potential outcomes, you're going to have these extremes purely through randomness. It's like happen to have been perfect in your timing against the market. There are going to be some random people who make the billions. And there are going to be, you know, a zillion of people who don't, but there are going to be a few of those, and the press is going to write about them. And I guess that's just inescapable. But the idea that there's some sort of genius associated with that, or some great contribution to society, no. It is mostly, I think, random luck, being in the right place at the right time. But we, you know, okay, we can live with that.
Can we, Chrystia?
But the only other thing I will say is I've now met a lot of billionaires. And I have to say, for the most part, they're a pretty miserable lot. We might think, oh, wouldn't it be great to have that $1 billion?
Unhappy or miserable people? Which do you mean?
They seem to be both. I mean, I don't want to name names and tell stories, but I could. Yeah. And it has made me wonder, as a culture sometimes, and we're guilty in journalism, we like put these people up on pedestals and fan them and, you know, bow down and want to write about them just because they happen to make the $1 billion, and I think we perpetuate this myth of somehow, oh, it's so great to be a billionaire.
Right, like, you know, so you get these books coming out about John Paulson with the title "The Trade of the Century," and you're like, you know,
he's a classic example of, he just happened, and his performance since then has been terrible, horrendously bad. And I'm sure that, again, the problem is he makes his billion that year. He can now proceed to lose other people's billions year in and year out. He'll still have his billion. Okay, life isn't always fair.
I think it is a problem that we have people making $1 billion, and I don't think that the solutions to that are necessarily so complicated. There are ways to redistribute money that should be on the table for discussion. Financial transaction taxes, having higher capital requirements for giant banks to make them much less unsafe, much less prone to collapse, and then provide lower returns for their stewards, their chief executives, who are really stewards of essentially public trusts. J.P. Morgan and Citigroup is essentially a public trust, and so we have a financial system that is perpetuating itself, financing finance. It is not providing the kind of value that we need from an intermediary sector of the economy that actually helps companies that make products and services that people will want and connect them with customers or capital. And so, we should start to think about much more a wider variety of solutions and not have them be embarrassing. One of the things about this attack on Brown Vitter, this bill to have higher capital requirements for the biggest banks, the attack is it's such a stupid, naive, blunt instrument. It's so sort of pathetic that these senators would even suggest it, and explaining to them patiently why it won't work. Well, that's the kind of undermining of these ideas that puts them out of the conversation.
Yeah, so I agree with that. And for me, the answer to this question is very much kind of at the center of my own conversion experience. So I used to very much be of the view that who has what matters less than who doesn't have what. And that's kind of a nicer way to think about the world, right? It's kind of more win-win, and it's more kind of loving of the world, and you're trying to lift people up, not push people down, and all of that stuff. That's also a very convenient intellectual frame for the billionaire class, for us all to be looking through. And what I think it misses is, well, one of the things it misses is that with economic power comes political power. And one of the things which, going back to the conversion experience idea, that I think there was some collective naivete in sort of the Western intelligentsia about how Western capital was working, was too much feeling like these were laws of gravity. This is how market economies worked, as opposed to seeing them as the creations as human social systems that had been created, sometimes with unintentional screw-ups there, but a lot of times created by people who knew what they were creating and were creating it because it served them well. So I think it is important to focus also on who has what, and to think about what is socially acceptable. And part of what's going to be acceptable is going to be looking at where is the crony capitalism, as Felix was saying, where are the unfair rents being extracted, and that's sort of a hard and difficult process. For me, the question I'm starting to be more interested in and worried about, or additionally interested and worried about, is in some ways, at least analytically, crony capitalism, and morally, that's the easy part, right? I've never met someone who says proudly, I am a crony capitalist and that is good, right? And I know the Russian oligarchs, so I know whereof I speak on this one. Everyone thinks he's not a crony capitalist, and everyone will accept, at least as a starting point, that we should create a system without crony capitalism. Maybe after I have my oil company, but we should do that. To me, and this is where I do think not being embarrassed by what you're saying is going to be important, is as the technology revolution advances, I'm really with Eric Brynjolfsson and this race against the machine idea. And the point that he makes there is no rule of economics that says with increasing productivity and technological advances, you are inevitably going to have the rewards shared equitably or even shared at all. That just might not happen. It's happened in the past, but it might not happen in the future. And the way Larry Summers talks about this possibility is he says, sure, with functioning capitalism, our kids will have jobs, but maybe their jobs will be, do you clean the deep end or do you clean the shallow end? And I think we do need to start thinking about, do we want to live in a world like that?
Okay, we're running out of time, so I'm going to do something very rude. But before I do that, I'm just going to, because you were mentioning about crony capitalism, I love that wonderful quote from which President Suharto of Indonesia said to Jim Wolfenson, where he goes, "What you call crony capitalism, I call family values." And to answer your question very quickly, my answer to your question is that no, it's not really justifiable, but I don't feel too morally upset about it, because my view of the hedge fund management industry and the people making $1 billion is they're actually making those $1 billion mostly from the top tier of the 1% anyway. But anyway, I have no more time.
Pension fund.
Yeah, I know the pension fund. I know the pension fund argument, and I don't buy it. Anyway, I'm going to ask for 2 questions very quickly here from the 2 people who are here, and then we're going to finish off with these 2 questions.
Hey, so I hate to be the one that asked the counterfactual question, but so I worked at Reuters in 2006, and basically on the Treasury desk, and basically we knew nothing about the market. The first month it was basically realizing that falling yields are good for the market, which I still barely understand. So my question is, I think journalists are uniquely incentivized to kind of look for bad things. There's been talk about how, other people in the system who could have found out what was going on, that they didn't find it. But since journalists are uniquely incentivized, if we had journalists who understood the problem with using like the Gaussian copula, for example, would anything have been different?
And very quickly before we come to that one, the last question.
So just touching on some of the things you guys had mentioned, the idea of in the 50s, it was like those couple of families and those bankers, and they were sort of raised with the idea of with great power comes great responsibility, to borrow a quote. That the rich had to take care of the poor because that was their responsibility. And now the rich are suddenly populated with the people who used to be poor, and they feel that becoming rich is maybe their way of sticking it to the man. Do you think something has been lost in translation between like these people who have come into being rich with the idea that they are now beating the system without realizing they are the system, and that maybe they should be taking some responsibility? Is there something lost there?
I can tell you there's an entire chapter of Chrystia's book about exactly this question, and the short answer is yes. The short, as the person who wrote the story about the Gaussian copula function, the short answer to would it have helped if we'd known about it before the financial crisis is no. I actually did understand it a little bit before the financial crisis. I thought it was whiz-bang fantastic. I thought it was brilliant, and all of these very, very smart people were telling me how wonderful it was, and I believed them. So, first you need to understand it, and then you need to realize how dangerous it is, and almost no one got that far.
Well, the other thing is that you could not open an issue of The Economist without reading about the housing bubble for about a decade.
Yeah.
And housing bubble stories were everywhere, all the time, omnipresent, and had absolutely no effect on the housing bubble, except, you were sort of alluding to this earlier, except to confirm in everybody's mind that it couldn't possibly be a bubble because the idiot journalists were still writing about it.
Well,
so there was enough skepticism
we were
out there
fighting
too.
against HGTV, right? Like, on the one hand, how many people read us versus how many people watch House Hunters, right?
But on the other hand, so I think the press did a very good job in the housing bubble and did a terrible job on the rise of the shadow banking system.
But I think, too, almost no one gets into journalism because they're really good at math. You were saying that you look at the math and you go through it. And I do go through it. I'm certainly not like one of the world's greatest mathematicians, but I can usually basically follow the math. But I actually think math was the problem in a lot of ways, right? Like we got fixated on the idea that we had all these numbers and that the number was going, once we got the numbers right, you know, once you got the right, we're still in a little bit of a way, right? We should raise capital ratios. I agree with this, but like, how do we calculate that capital? Because a lot of there's an argument that having these dumb metrics where sovereign debt gets one weight, well, okay, everyone piles into the riskiest sovereign debt that gets that weight, and you actually enhance these exposures because we get very, very fixated on hitting a target, and you're not necessarily looking at kind of the holistic, hippy-dippy underlying health of the economy. So, you know, part of the problem is that journalists, when you go to interview a quant, like, the odds of any journalist being like, I, with my PhD in physics, am going to totally tell you why this correlation is wrong, are pretty slim. But on the other hand, that the regulators really got very fixated on numbers, and I think still are, in a very unhealthy way. And journalists aren't in a position to call them on that, because most of them are English or poli-sci majors.
You know, I thought the question's very interesting about the passing of this old order where, you know, families, you sent your kids to Andover and they went to chapel every week and they learned this noblesse oblige idea and that sort of thing. They took care of people is now all gone. And what's taken its place? I was quite startled that at the depths of the financial crisis, Ayn Rand had this sudden surge in popularity. She vaulted to the top of the Amazon list. Now, I remember reading, I think it was The Fountainhead in high school. I think it had a sex scene, or we had several actually. So I went back. You can get these things on the Kindle now for like $1. So I went back and read a lot of these Ayn Rand things. And first of all, I just have to say, as literature, it is so bad. I could not. It is so crude and heavy-handed. But the idea, of course, is the opposite of this old thing. It's very, you know, she grew up in the Soviet system, and it was very anti-establishment and, you know, merit, you know, trample over anybody, let the strong, you know, survive, let the weak perish. I mean, just celebrating all this. And I don't have the answer to this, but I still find an incredible paradox that at a time of great hardship for so many people in this country, that suddenly this cult of Ayn Rand sprang back to life.
Well, in fairness, I think some lunatics made a movie out of Atlas Shrugged, and that may have had, they did. I don't think that they did. I had to review it. It was really appalling. It was possibly the worst movie I've ever seen, except for the legendarily bad Room, which is literally just filmed in a room with the guy who made its girlfriend.
Yeah, but these Tea Party people are like, you know, carrying around copies of Atlas Shrugged and waving them.
Oh, but they were before. I mean, like, libertarians have been reading Ayn Rand.
Well, I don't know. I'm just telling
decades.
you that the numbers went way up. And I can't explain it. I would have thought the opposite would have been.
Yeah, so of course it would be good for journalists to be much more educated, and there should be maybe obligatory math tests we must pass before we can publish anything.
Depopulate
but I'm with Felix actually that wasn't the core problem, because after all, lots of people who had passed many obligatory math tests were much more complicit in the crisis than mere unnumerical scribes. I think the skill, maybe it's not so much a skill as the habit of mind that we should all try to practice more post-crisis, is systemic skepticism. I mean, skepticism for sure, but like journalists are kind of trained to be skeptical about like that individual person you're interviewing. And I think as a group, we kind of lost the ability to be skeptical about the whole system. And I still kind of am shocked at how bad I was, because that was kind of what I did in the Soviet Union. And like sort of watching the Soviet Union collapse, you saw this whole society where their system changed, and you saw people being like, oh wow, so we're not going to be the Soviet Union anymore. But it's much harder to apply that kind of skepticism to your own society and to really understand this belief that everybody has, that all the smart people have, that all the nice people have. It could be right, but maybe it's wrong. And that's the sort of looking around corners that I think we should all try to practice a lot more. And then just finally, yeah, I mean, for me, one of the most troubling things about how our society is working and not working right now is this sort of horrible connection between meritocracy and openness and competition, all of which I thought were really, really good, and less of an obligation to society, which I think is really bad.
And meritocracy, of course, was the word was coined by Lord Young as like this horrendous thing which no one in their right mind would ever want, and then was embraced by the entire Western world. We are out of time, but I think you have a little glimmer of hope, and this has been an unbelievably pessimistic panel. I like this idea that having been through this financial crisis, we are more attuned to systemic problems. We are less likely to simply believe people because they have PhDs and they are rich. Is there any other glimmer of hope, Jesse, James, Megan, that you can offer us that maybe we can latch onto before we all just leave and split our wrists?
I would sort of offer a glimmer of hopeful anti-hope. Which is, and like my fundamental story about the financial crisis is like markets get into bad feedback loops, and there may not be a whole lot you can actually do about that. All the regulators, everyone was getting the same bad signal from the housing market, that what they were doing was working. But by that token, we've been through this before, and for all that we talk about the Great Depression, this is way not as bad as the Great Depression. The Great Depression was really awful. People 25% unemployment for years at a time. Unemployment was still 15% as we entered on the eve of World War II. And so the actual hope is that for all the ways in which it failed, the system did better this time than it did the last time it happened. It did better than Japan when this happened to Japan. The system is not, I'm not trying to tell you the system is great, but it's better than it could have been. And it has, in some ways, less capacity for reform than we would like, but it also turned out to have more resilience than many other systems that have gone through the
Cheer up, people, you're not Greece.
Yes. That is no small thing, Felix. We are the best looking economy, big rich economy in the world. We should be at least happy.
Canada, don't.
Yeah.
Don't ever look
And that's the other great glimmer of hope is that if it all goes belly up here, we can all just move to Canada. And
well, I'm optimistic about young people these days. I sense a real change in this sort of Ayn Rand kind of Thatcherite, the virtuous rich kind of thing. A lot of questioning. And I think they were changed. They were teenagers in the fiscal crisis years, and now they're in college, and there are a lot of interesting ideas bubbling up. And I think they've embraced diversity a lot more than my generation. My generation paid a lot of lip service and then went right out and moved into a gated community. And they're, if I was the Republican Party, I'd be very nervous about the kinds of things that they're embracing, including immigration and gay marriage. And I don't know, I think I love that about this country and the world generally, that we replenish ourselves constantly, and this new generation, I think, has a lot to offer.
Free Cooper Union, and the students around the corner are being, they're speaking up. And
oh, we should probably end on that upbeat note because I'm so pessimistic. But I think things are much worse than we understand. I think you're absolutely right that we're just not fully appreciating how bad things are for average Americans, how they're likely to get worse with our current political system, and what a lousy job journalists are doing telling the story, and how we're probably going to do a worse job in the future because there's no money for it.
Can I say one hopeful thing?
Please, Chrystia, I'm not going to let Jesse get the last word on that one.
Okay, I'm going to say one hopeful thing, which is I discovered in the course of the past hour and a half, which is Jesse has made me really hopeful for two reasons. One, I do think that actually asking moral questions about the economy is really important, and it's something we're not used to. And that has to be a good start. I mean, Clay Christensen has been giving speeches saying we all need to believe in God in order for capitalism to work, and we need to believe in an accountable God, like a God who will punish us if we're bad. Otherwise, we won't be good. I'm not sure I'd go that far, but it is important to be thinking this way. And then, relatedly, I love Jesse's point about not dismissing something as dumb just because the sophisticated financiers don't like it. And I do think there has been a little bit of a breaking of taboos about talking about especially issues of class and income distribution, which used to be really hard, and I think that's broken out more into the open. So those are two hopeful things.
Awesome.
Good.
So, panel, thank you all. And yeah.
Thank you.
Occupy.
Enjoyed it. Yeah, thank you. Really enjoyed it.